communication services to hospitals in the countries like the US, Canada, Europe, Australia, and the Middle East. The company's product portfolio, which includes Spok Care Connect, enables faster collaboration between all healthcare team members. The largest pager carrier in the US with over 815,000 pagers. Spok solutions are used in more than 2,200 hospitals that send over 100 million messages each month.
This is, pagers were used back in the days. Now, let me ask, why are pagers so important tool for hospitals?
Yeah, that is a good question. Pagers may seem antiquated, but they're the safest, most reliable way for hospitals and doctors to communicate. They only need to be charged once every week or two, which means they're less likely to lose battery. And they don't need to be charged all the time like cell phones. Pagers are also more secure than cell phones. It's easy to send confidential information over a text, which could easily be compromised or stolen. Pagers, on the other hand, only send numeric messages or really basic text messages. It's impossible for confidential information to get in the wrong hands, something, again, that is common with cell phones. Now, it has long-standing customer relationships with the best hospitals in the country. This includes 7 of U.S. News and World Report's top 10 children's hospitals and 20 of the top 22 adult hospitals. And now the average tenure for its customers is 24 years. The long-term contracts with its top customers provides it with a reliable income revenue stream. 80% of its revenue is recurring due to maintenance revenue from a contact center and wireless paging revenue. Of its $134.5 million in 2022 revenue, $112.6 million was recurring.
And John, I was reading that Spok net income more than doubled in the second quarter.
Yeah, for the second quarter, Spok Holdings announced that net income more than doubled to $4.7 million or 23 cents per share. That's up from $1.9 million or 10 cents per share in the same period last year. The company also generated $8.5 million of adjusted EBITDA compared to $4.7 million in the second quarter of 2022. Now, end of the quarter with cash and cash equivalents of roughly $31 million, and it continues to have zero debt.
And would you say this strong financial performance led management to increase its 2023 guidance?
Yeah, with the company firing, as management says, on all cylinders, the company was able to increase its full year guidance. For 2023, it expects to report total revenue in the range of $134.5 million to $137.5 million. Now, that's up from previous guidance of $131 million to $137.5 million. Adjusted EBITDA, meanwhile, is projected to be in a range of $25 million to $28 million. And that's up from previous full year guidance of $24.5 million and $26.5 million.
It returned $6.2 million to its shareholders in the second quarter of this year.
Yeah, in its most recent investor presentation, the company notes that its strategic goal is to run the business profitably and generate cash. Another goal is to return capital to shareholders, and it's been true to its word. It has returned more than $660 million to shareholders since 2004. This includes $25 million in 2022 and an expected $25 million in 2023. Now, as you were mentioning, in the second quarter of this year, it returned $6.2 million to shareholders in the form of regular dividend. This resulted in a second quarter payout of $0.1325 per share, or $1.25 per share on an annual basis, for a yield of 8.76%.
SPOK stock has doubled over the last year.
Yeah, we've been keeping a pretty close eye on Spok Holdings because it's, I think, such a compelling high-yield dividend stock. When we profiled the company back in April 2022, it was trading at $7.97 per share. Spok stock has made even pretty big gains since then. This past September 20th, it hit a new record high of $15.97, which is a 101% increase over our April 2022 profile price. Spok Holdings stock continues to thump the broader markets too, up around 28% over the last 6 months, 86% year to date, and again, 102% year over year. And thanks to strong guidance and a rock solid balance sheet, the outlook remains pretty robust for Spok stock.
John, thank you so much for your analysis. Just to recap, Spok Holdings continues to be an excellent ultra high yield dividend stock that has been providing shareholders with the strong capital gains as well. In 2022, it announced a strategic business plan prioritizing maximizing of free cash flow and returning capital to shareholders in form of high yield dividend and share buyback. Since then, the company has realized significant business improvement in virtually every area, including sales, product development, and overall execution. On top of that, it continues to return significant capital to shareholders, funding 85% of its dividend from free cash flow, leaving it with low payout ratio of 71.43%. This gives the management more than enough financial wiggle room to increase its quarterly dividend if it wants. And we know shareholders want them too. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.